Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studios. Monday morning, lots to talk about. Hopefully better things as compared to what we've had over the last few weeks now. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, good morning.
Hi guys, morning. Hope you all had a good weekend. Hope our viewers had a good restful weekend as well. What's been really amazing over the weekend is the number of memes on politics that are out on social media, those AI generated videos on who's meeting whom, who's going where, who's dining with whom. Very entertaining, but also very important to track, actually, even from a market perspective.
Well, that's right. It was Raksha Bandhan over the weekend as well, and that as well got its share of memes, right, with regard to the political angle as well. But our markets have been a little bit under the weather. Things have been looking a little bit gloomy. Let's hope that this week is better than the last 6.
Absolutely. By the way, you said talking about those memes, right? AI generated. Did you guys see that? There was this meme about, there were bunnies jumping on a trampoline. Did you guys see that?
No,
It went absolutely viral.
Yeah.
For about a week it went viral, and it looked like, some hidden cam had recorded it at night. This was in the night in the US, I think. And a week later, people realized that it was AI generated.
Oh,
I think this is one of those things which tells you where we are headed.
Yeah.
It took a week. And then, somebody came out and said, well, this is AI generated. So I think, the lines between reality and what is, of course, generated content out there.
Prashant, you almost had me out there because, just this morning, I was jumping on the trampoline for around 2-3 minutes. And then I was like, did Prashant know that it was the bunny?
I've got a cam right there. But anyway, you should check it out if you've not. You should check it out. Anyway, let's just take it from the top, right? In terms of what you need to know as we begin a new session. And I think, and I may be completely sort of off the mark here, but maybe this is a better week. This is a better week starting maybe tomorrow, day after. It's a holiday shortened week. Friday is a market holiday because it's the 15th of August, Independence Day. And why do I say that perhaps, leading up to that Friday, which is a holiday here in India, things perhaps get a little better. The US President Donald Trump will meet with Russian President Putin on Friday in Alaska. And this is with regards to both trying to negotiate an end to war in Ukraine. Remember, Ukrainian President Zelensky has already warned that Ukraine will not cede any territory to Russia. So he's saying, well, any agreement which is signed without us there, without Ukraine there, is moot. It won't matter. But the stakes are really high. You've got leaders of both countries meeting in Alaska. It's like a peace summit. And both sides, especially President Trump, would like to walk away from that summit with something concrete in his hands, right? An agreement of some sort. And I think that is the reason why this becomes the single most important talking point, news point for the market as we look ahead. And that is the reason why I'm saying, and this sort of connects to the positioning in the market, which is extremely short. And I think some 1.8, 1.9 lakh contracts short, 35,000 crores worth index shorts in the system. So, ahead of a big summit like this, I think you will have some nervousness. Just look at what's happening with gold prices this morning. They're down about 1.5%, oil, etc. So I think you will have some nervousness. Shorts will be nervous going into that Friday. What if, there is a resolution and end to the war, which is struck. It's been going on for 3 years now. And of course, I don't need to explain, but if that war goes away, Russian sanctions go away, and of course, that 25% ad hoc tariff on India, also perhaps we start to see some relief. So India has, by the way, welcomed the summit between United States and Russia, and India will hope that a peace deal means India will also see tariffs and other sorts of relief. So in a way, it's what it is, but our situation here with those 25% additional tariffs which were imposed because we buy Russian oil, military hardware, etc., is tied to what US does with Russia in that sense. And that's the reason why this is important in that sense. Okay, just a couple of other things. So US-China trade standstill, that also expires on the 12th of August. There are some headlines which say that that could be extended for another 90 days. We'll see. US equities rallied on Friday. Nasdaq, by the way, was up 1%, set a new all-time high. And the narrative in the US seems to be very simple, that AI, productivity and profitability are more important than tariffs. And this has been true for some time. And of course, I mean, the other narrative is that there will be weakness because of these tariffs in the second half, but there will be Fed rate cuts, which will take care of that. So this is the two kind of, main threads, a US market narrative, which is underpinning the entire thing there. Last week, just look at the sort of price action, right? Nasdaq 4% higher. You have the MSCI Asia Pacific Index, which was up 2 points. So, by the way, US did well. Asia did very well. India was down 0.8%. And that's extremely stark out there. Since last October, by the way, MSCI India has underperformed the MSCI World, and this is in dollar terms, by 20%. That's a massive underperformance that we've seen. And, there is, of course, I started with the summit in Alaska, but I think, tariffs are 50%, FIs have sold over $10 billion, $12 billion, YTD. And, of course, I mean, you start to wonder, are we near peak fear levels? By the way, only 2% of MSCI India total revenues come from good exports to US. It's not unknown data. This is very well known. But the thing is, I mean, it's what comes first, right? I mean, if this gets resolved on Friday with a peace deal between Russia and Ukraine, negotiated by US, you don't have to wait for 20 days. Otherwise, I mean, there is this 20-day negotiation window when this additional 25% tariff takes effect. So, sentiment, of course, overhang will persist unless something happens before on Friday. I'll just leave you with the levels. Nifty support 24,243, and then, on the downside, 23,800 and 23,900. These are the two kind of levels which you should watch from here. For the Nifty Bank, support stands at in the range of between 54, it's a gap area, 54,442 to 54,054. So this is the gap area where the Bank Nifty should find some support. But I mean, the way I would think about it is that over the next couple of days, because the positioning is so massive on the short side, you start to see some covering into that Friday event. And Friday you can't trade because the markets are shut. So whatever comes out of it, you'll only be able to react to on Monday. GIFT Nifty will give you a quick sense of how we're likely to start, and we'll pick it up from there. It's absolutely flat in terms of the implied open. Surabhi.
Absolutely. Prashant, maybe some people like you and me always keep some track of global politics, but usually it's not, center stage or center court for the market. But the last, I think, 4 weeks has changed all of that, including, the statements that Mr. Munir made last night in the US on that visit. It's the second visit that he's made in the last 3-4 months since Operation Sindoor happened. And it was in full public display, the verbiage, the commentary on the nuclear threat, that if we are under attack, then we'll take half the world down with our arsenal, so on and so forth. So lots of rhetoric also coming in. Anyway, we'll see how this resolves. For today, we've got a mixed picture across Asian markets. Some of the markets like Japan are shut. It's all about the US-China trade negotiations. And in all probability, we had some overtures even last week from the US side that this 90-day pause window will probably be extended for China. So let's see how that goes. By the way, FT put out a very interesting story that's telling you how US companies have been finally allowed to send their chips and sell them in China again. It's coming on the back of what seems to be a 15% revenue share arrangement with the US government. So all the revenue out of selling those chips in China, 15% goes to the US government. That's how NVIDIA and AMD apparently have been allowed those sales. Anyway, now we talk about us within the Asian context, because we've had our own charted course, and it's been a course on the way down. The market is at a 3-month low, near 3-month low, the lowest levels that we saw since the 12th of May. And today we are on the 11th of August. So, 3-month lows for all practical purposes. Friday was disappointing because we had a sell day despite positive institutional flows. Look at the institutional flows on Friday. You had about 2,000 crores of buying coming in from the FIIs. Domestic institutions were buyers of cash equities worth over 7,700 crores. So it's telling you that the capitulation that happened over the last couple of days, specifically Friday, that's where HNI, some of the larger retail participants, they are now beginning to get a little worried, and they have contributed to the selling. Speaking of retail, today the MF data is going to be in focus. The monthly numbers will come in, and if you remember, Nilesh Shah of Kotak Mutual Fund told us on this very show last week that expect record equity flows for the month of July. But we have to wait and watch to see if retail is indeed keeping the faith beyond just the SIP numbers as well. Okay, now what next in terms of watching the India-US headlines? We have headlines coming in from the Commerce Minister over the weekend, Mr. Piyush Goyal. And he's again reiterating, obviously, the same stance that the Prime Minister took by saying that we will protect our farmers. He's saying that India will not kneel in front of anyone. And on that comment about India being a dead economy, which the US President made, he's saying we contribute 16% to global growth and we'll have our own trade negotiations with different trading partners beyond the US as well. So again, the stance of the Indian side seems to be that we're not going to back down. Just placing that on the table. Now let's come to some very interesting corporate developments as well, starting with ICICI Bank. What has ICICI Bank done? They're going up the premium curve, so to speak, because they've increased the minimum account balance requirements across the board. For urban accounts now, it's instead of 10,000, it's 50,000. For semi-urban, it's 25,000 versus 5,000, and even for rural accounts, the threshold has been increased from 5,000 to 10,000. So we'll see. Largely from a market perspective, this will be taken as positive because you deal with wealthier clients, so to speak, and basically it gets you a better bang for your buck. We'll see how the market reacts to it. Talking about the OMCs, watch for that because finally, as we've been reporting all along, this LPG compensation package has come through. It's a large package, 30,000 crores, maybe not covering the whole losses, but some amount has come through. Coforge fell very sharply on Friday, and the worry was what's happening to Saber's guidance, which is one of their key clients. Now, Coforge hasn't disclosed anything. They're saying there's nothing material to disclose right now. Nothing is impacting our finances. Let's see if the market gets convinced or not. But it's an important stock, so watch for this. And finally, tracking weekend earnings. There are, I'm afraid, not too many positive headlines to report. The tail-enders are a little disappointing. Siemens margins are a miss. Tata Motors, there's weakness across the board on JLR or their other numbers as well. And Voltas, like PG Electroplast, is another completely washout quarter. By the way, we'll speak to PG's management as well. But short point, earnings not exciting, but there's lots of other news to look forward to this Monday. Nigel.
Well, the Nifty is on a 6-week losing streak. The bulls have their back against the wall, but I expect them to come in there and fight to save the 200 DMA. I think we'll see a better fight coming in from the bulls. And maybe, in fact, after the kind of sell-off that we've seen, maybe this week is a better one. And, if you look at the data points as well on the domestic front, power consumption, aviation data, movement of cement and steel, the FASTag numbers as well, just for the past 7 to 10 days, they are showing some kind of signs of improvement in terms of the domestic economy. Let's hope that sustains, because that's the crucial data point that Trump's tariff tantrums will gradually settle down. So that's going to be important. What about the FIs? No prices progressing. They went ahead. They added short positions on index futures. They added shorts even on stock futures. So they continue with their shorting ways. And last week, at the start of the week, we were talking about them being net short with close to around 1.5 lakh contracts on the short side. Guess what? This week, we are starting the week with their net short contracts at around 1.83 lakh contracts. It's moving to that extreme level that we have seen in the past. And in percentage terms as well, the long positioning is only at around 8%, while you have the shorts at around 92%. So the short point is this market is heavily net short. When you have such a net short market and you have a big weekend coming up, big event lined up during the week, maybe the shorts will get a little bit nervous because they've seen a lot of follow through on the downside. But now, in case things go right, then in fact they could get stumped out. And there are three big cues that I look at. One is the FI net short positions. Well, in percentage terms, the highest we have seen since March 2023. The PCR has come down to that level. Normally at around 0.65, 0.6 is when you see that bounce that comes about because call writing has got too easy. So we're at that. And the relative strength index, it's come down to around 35. At around 30, that's when we get into the oversold zone. So put all these three factors together, you're expecting a bit of a bounce, and that could be due in the next couple of trading sessions itself after the kind of pullback that we have seen. The options data comes up for you, 24,500 call, 24,300 put, both of them seeing aggression. And just take a look at that. The 24,500 call writers, they're getting very comfortable. 85 lakh shares getting added out there. The premium is what they're eating into. Which brings us to the levels. Now, it's very, very important that the Nifty defends that 200 DMA. So that's the deeper support. You do want this level. The options data suggesting near-term support of around 24,200. So this zone is extremely important. Well, if the markets can get up, you'll want it to get past the 24,500 odd mark because that's where the 100 DMA comes in at. So you'll want it to get past that. But crucial that we defend this mark. The Nifty Bank, well, that's not broken all the technical levels because at least as of now, it's still holding on to the 100 DMA. That's only 200 points away from current levels, but you don't want this to get broken decisively. So that's going to be important. And in terms of stocks that I'm looking at, well, I'm looking at Home First Finance because Nimesh should be joining in. There's a large trade that it's expected. Last 1 month, the stock, in fact, is down close to around 13% approximately. And, this is a clean-out trade, so we'll keep an eye out on that one as well. But various cues indicating that we're in an oversold zone. Maybe this week is better for the bulls.
Well, I think it should be, right? I mean, been a while since we've had a better week as compared to global markets. Nigel, thanks for that. We have Vikas Parishad, Portfolio Manager, Asian Equities at M&G Investments. Vikas, good to have you with us here this morning. Good morning. Just a quick word on the summit in Alaska on Friday. You think, there will be, of course, a lot of this. The summit is a summit, and there'll be the photo op and the all of that. But behind the scenes, I mean, I'm assuming both sides would try and figure out a solution for their leaders to sign upon, right? So you think we will see something concrete? Looks like it. I mean, if you're making a big show of it, a big effort, going all the way there. What should markets expect, Vikas?
Good morning, Prashant. I think something concrete should happen. India presumably will be part of these conversations. There's an impact to oil. There's an impact to various sectors that we're exposed to in India, but broadly, of course, as well. It's interesting that President Zelensky from Ukraine will not be there. It's for President Trump and President Putin. So we'll see. But all eyes on that, but all eyes on negotiations between the US and China as well, the US and India, of course. In early May, when the markets had rebounded and India was the first major market in the world to erase its post-Liberation Day losses, if somebody had told me that we'd be talking about tariffs that are higher on India than on China, that would not have been my base case. So a lot of surprises, but we remain very constructive on India. It's easier to be more constructive on Indian equities at these levels than back in May or even in September, but we were fully deployed in September. At the end of last year, we were fully deployed in April and May. The constituency or the constituents of the portfolio have changed a little bit, but we remain very constructive on India for the long term.
That's good to know, Vikas. Hi, morning. Great to have you on the show. These days, it's probably, you can still try predicting markets, but predicting global politics, well, that's become another thing these days, right? Ever since Mr. Trump took office. Now, on that, just to conclude that point on whether this weighs on India, do you think the fact that there seems to be a rupture in the relationship and then, even diplomatically, militarily, trade, would that at all become a bit of a niggling issue for foreign investors looking at this market? Because it's not like we have 20% earnings to make up for any other gray areas. My short point is, will India's relationship with the US in the short term weigh on investors' mind?
So I think clearly the answer is yes. FIIs, it seems like for the past few months, have been looking for reasons to sell, whether it's India, Pakistan, or the Liberation Day tariffs, when there's uncertainty around that. Our view is the opposite, that this uncertainty, this volatility is creating a lot of long-term opportunities. Yes, we don't have the 15 to 20% top-line growth in aggregate, but it's still pretty healthy. What we've seen in the most recent earnings season, not done yet, there's still some companies to report, is that active management matters. There's a lot of dispersion within sectors. If you look at IT services or staples or healthcare or the automotive sector, a lot of dispersion, a lot of differential between the leaders and the laggards. So active management matters. Having a long-term view matters. But in the short term, clearly FIIs are voting with their capital and they're electing to put their money elsewhere.
Hi, Vikas. Good to see you. When the last time we chatted, we were talking about how India was the first market to bounce back. And now, all of a sudden, we're getting the harder end of the stick from President Trump. But our markets have reacted a fair bit. I think in the past, there were a couple of sectors that you were quite positive in the Indian markets. NBFCs, defense. You had lightened some positions, though, out there. Currently, which is your top sector here in the Indian markets that you're looking at?
Our portfolio is diverse. If you look at our top 10 holdings, you'll see 10 different sectors represented. If there are some common themes, there are beneficiaries of manufacturing, direct manufacturing, not the EMS sector, where we have very little positioning. It's healthcare services, not so much pharma, diagnostics, hospitals, higher-end property, auto ancillaries, the derivatives of the automotive sector, two-wheelers in particular. There's defense as well. We had lightened up in defense a few weeks back because it had priced in quite a bit post-Operation Sindoor. But we've added some of that exposure back as these names have been selling off because the long-term story still remains intact. I would, just on this tariff situation, I would recommend viewers go back and watch the conversation with Mr. Tharoor from earlier this morning. He brought up a lot of good points. In the long term, India and the US need each other. I think both sides would agree or disagree on who needs the other more. But these are clearly going to be long-term partners.
Absolutely.
For political reasons, yeah.
Yeah. Since you mentioned Mr. Tharoor, just reminded me today, I think the Commerce Minister is also going to be briefing the Parliamentary Standing Committee on External Affairs, and Mr. Tharoor is leading that committee. So I think we'll have some more idea about where things stand. But thank you very much, Vikas, for your perspective this morning. Very, very helpful. Thanks for joining in. Well, with that, let's quickly tell you what else we've lined up for you. It's a packed next 2 hours coming up. Lots of interactions today at 9 a.m. We'll have Rohan Mandora of Aquarius Securities to talk about trends in the banking sector. What have we picked up from the first quarter numbers? At 9:20, Mihir Vohra joins in. He's our market master of the day. Then we get into a conversation with the management of Bluestone Jewelry and Lifestyle. They're coming out with their 1,500 crore rupee public issue. So they tell us more about their business. A little later at 9:50 a.m., we have Shweta Arya, Managing Director of Cummins India, to talk about the quarter gone by and, of course, the outlook ahead. Towards the end of the show in our special segment, Indianomics, Lata today discusses the impact of a key Supreme Court decision on the power sector with Alok Kumar of All India Discoms Association, Pradeep Kumar Pujari of the former Power Secretary of India, and Nikhil Nigania of Bernstein.
Time to slip in a short break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. We're looking at IOC, HPCL, BPCL, Lemon Tree Hotels and DOMS. All of them will be reacting to positive news flow on the flip side. We're split down the middle. Tata Motors, Siemens, Voltas, Manappuram and Home First Finance will be reacting to negative news flow. Get into that break, come back. We'll get into further detail on all of these names.
Welcome back. Let's quickly glance across Asia. Pictures are quite mixed across the markets over there. You can see not too much of a great directional cue coming in. Let's get the implied open up on the screen. Will there be any hope for the bulls, any respite from the non-stop selling that we've seen? Well, quiet. Let's see if we can build, start 15 points lower and then build on it going forward. There are lots of very interesting stocks in focus today on earnings and other news flows. So let's straight away get to our top 10 list. We've got Sonal kicking off the proceedings with OMCs who finally have some relief on the LPG under recovery. Sonal, morning.
Oh yes, there's been a long wait for that, and finally the government has announced that there's a 30,000 crore compensation that they will be providing OMCs, and this is for FY26 and FY25 as well. This is of course lower than 41,300 crore for under recoveries that oil marketing companies have won till date. Also, it is not known whether this is the only tranche they'll be getting or they will be getting more than what they have received right now. But it will be done monthly over 12 tranches for these companies. Jefferies says that it is a big positive that has come by. They estimate an upside of 29 to 42% for their EBITDA for FY26, that is, and around 38 to 70% for FY26 PAT. Of course, this is assuming that all of this amount would come in FY26 itself for these companies. ICICI Securities says that it will be a material boost for their fortunes, and it will help offset all the margin worries for FY26 as well. So this is about oil marketing companies overall. Additionally, the government has announced that subsidized LPG cylinders under PM Ujjwala scheme will be cut from 12 to 9. So basically the 300 rupee subsidy that households were getting, that will be done only for 9 versus 12 cylinders earlier.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Rima. She's here to tell us about Tata Motors numbers that looked a little bit soft. Hey, Rima, morning.
Well, slightly soft on expected lines. There was a tariff impact. So revenues declined 3%. EBITDA was down 35%, with EBITDA margin coming in at 9.3%. So in single digits now, and profits are lower by 35%. But analysts are saying that broadly, numbers are in line if you exclude the tariff impact, which was estimated at 3.8% of the Q1 sales. Now, in terms of commentary, the management says that JLR demand is healthy in the US, stable in UK, but weak in China and EU. The tariff impact they've calculated is 500 to 600 million pounds this fiscal year and 300 to 400 million pounds after that. the outlook. But, despite a weak Q1, the company still maintained the EBIT margin guidance for JLR, which is between 5 to 7%. Now, the stock is down 14% since the start of the year. Valuations, according to analysts, are largely undemanding. And from here on, even Sudarshan was saying, it's, this Q1 is muted on expected lines, but going forward, the festive seasons is going to drive the sales, is going to drive sentiment for Tata Motors. Back to you.
All right, Rima, thank you very much for that. So keep an eye out on this one. Siemens is the next one we want to focus on. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. When you look at Siemens, the revenue grew by almost 16%. The execution was better this time around, and the revenue has come in higher than what the street was anticipating. However, the operational performance was rather weak. Take a look at the other expenses. They surged by almost 40% on a year-on-year basis. This, in turn, led to the EBITDA margin contracting by around 90 basis points. And, it came in almost 31 basis points lower as compared to the street's own expectations. And the net profit declined by almost 3% on a year-on-year basis. And that is because the other income also declined by 21%. So operationally, a weak set coming in from Siemens. Now, as far as segment-wise contribution is concerned, the growth largely this time around was led by mobility, which grew by almost 34%, and smart infra, which saw almost 21% growth. The digital industries this time around saw a degrowth of almost 5%, and low voltage motors were up almost 1%. So not great growth coming in for digital industries as well as low voltage motors. Now, as far as segment-wise margins are concerned, the sharpest drop in the margins was seen in the low voltage motors, which declined by almost 1,150 basis points. Good expansion coming in from mobility as well as digital industries. The ordering activity, though, this time around was up almost 13% on a year-on-year basis. This is higher than what most analysts were expecting. So, operationally, a weak set coming in for Siemens, going with the red for this counter.
Okay. All right. So, Siemens, not that great in Q1. Thanks for that, Vamakshi. Let's talk about Voltas, another AC company, another disappointing performance. Vinny, tell us more.
Absolutely, a very weak set of numbers that's come in from Voltas in Q1 FY26. Revenues are down by 20%, and it's miss on all the fronts, whether revenue, PAT, EBITDA margins, everything was a miss coming in for the company. And obviously, this was led by the weak performance that came in the unitary cooling products. That's the AC segment of the company. Now, the UCP segment, that's the unitary cooling products, like I mentioned, is down 25%. Shorter than expected summer, early rains is something that led to the sharp fall and sharp decline in the RAC sales. Now, other than that, margins for the segment also were down by 500 basis points and came in at around 3.6%. Negative operating leverage is also a factor that came into play over here. EMP segment, that was also seeing a bit of a weakness. Muted performance, down 3% on a year-on-year basis. And the management is quite cautious about their approach going forward as well. Voltas Beko, on the other side, for the company, was the only one which managed to see growth this time. So that will be interesting to watch out for. Overall, a weak set of numbers from the company.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Gaurav, who's here to tell us about Manappuram Finance. Gaurav, longer-term story, the street is optimistic, but the past quarter, soft quarter, right?
Well, yes, when we look at first quarter specifically, it was operationally weak and a longer-term story still remains intact. But when we look at the numbers, now net interest income declined almost by 10%, which was actually 9% lower than the street's expectation. And as a result, net interest margins, that declined almost by 80 basis points on a sequential basis. Coming to the operating profit, the same trend follows. It declined almost by 32% on a year-on-year basis. When we look at the provisions and the credit cost specifically, it was something which was positive because that declined to around 5.1%. It was fairly in line with what the street was expecting. But as a result of weak operational updates, we saw profit declining almost by 76% on a year-on-year basis. When it comes to AUM, there also we saw a degrowth of around 1% on a year-on-year basis, and this was specifically pushed by gold, and that was something which was a supporting factor for AUM. In fact, company is also saying that going ahead, they will be taking gold portfolio to around 75% of the portfolio, which is currently at around 65%. What they're again saying is that when we look at asset quality, vehicle finance is something which was a pain point in this quarter. And at the same time, going ahead, what they're saying is that they are also expecting some kind of moderation in the margins in terms of gold books. So that is also something which is concerning to the street, because these net interest margins will not see much of an upside going ahead. What is positive is that the deal with Bain Capital, now the company has said that that remains intact. The progress is as planned, and they are awaiting RBI's approval. They are expecting it by next month. So that is something which is positive from the commentary. But all in all, weak set of numbers in terms of operations from the company in this quarter.
All right, Gaurav, thanks very much for that. Let's talk about the next one. Lemon Tree in focus. Mangalam is here. Mangalam, morning.
Good morning. So the first quarter was fairly disrupted by, one, it being seasonally weak, and secondly, we had the Operation Sindoor and a lot of travel plans as well, which were disrupted. But despite that, Lemon Tree did well in the first quarter. In fact, further on their revenue and EBITDA expansion, they had lower finance costs and higher other income as well. That gave a big boost to the net profit. So 18% revenue growth is what the company reported, 22% EBITDA growth, which implies a margin improvement of almost 150 basis points, 160 basis points to be precise. And the net profit, that jumped 139% from 20 crore to 48 crore. That was aided by lower finance costs because the company's debt reduced by 10% and their cost of debt reduced by another 10 percentage points as well. Total rooms for the company this time around were higher by 5%. Occupancy on all of that increased by about 600 basis points. And we had the average room rate increasing by 10 percentage points as well. So all these factors aided to a good performance. But apart from all of this, the company is looking at the next leg of leadership as well. Patanjali Govind Keswani, who was currently the MD CEO of the company, has now moved to become the executive chairman. And they've hired Neelendra Singh from Shoppers Stop. He's been there for about 26 years to take over as MD from October 1. So that's a strategic leadership shift that we will watch out for Lemon Tree.
Okay, all right, got it. So Lemon Tree on the radar as well. Thanks for that, Mangalam. Let's go back to Vinny. She's looking at some numbers for DOMS. Vinny, how are they?
So DOMS numbers, at least on the top line front, a very strong growth that has continued for the company, 26% growth. Even last quarter, they managed to see this growth. So they are sustaining that 26% plus growth for the company. Now, where the impact came in this time was in terms of the margins. They have seen a contraction of around 200 basis points, and this was due to the change in the mix. Segment-wise, they managed to see growth coming in across the segments. Margins, that's where the concern came in. Now, overall, the company is highlighted, that they're keeping the target revenue growth of around 18 to 20% for FY26. So on the back of this, we're seeing ICICI Securities, they've maintained the ad rating, but the concern comes in on the target price because they've reduced the target price a slight bit to 2,550 from 2,675 rupees. So maybe we'll see the stock open up in the green and then maybe could end the day a bit muted in the trading session.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Nimesh. He's here to tell us about Home First Finance, where there's going to be a clean-out trade. Nimesh, tell us more.
Yes, Nigel, there is a clean-out trade. It's a large block in Home First Finance in morning trade. Bob is looking to sell its entire 10.3% stake via block deal. The size, the indicative size is close to 1250 crores, and the price band suggests a 0 to 5% discount. I understand there is a strong demand from some long-only funds, but the execution could be key. If not in block window, the stock may open in the red to start with and then to see how the demand pans up. But a large clean-out trade in Home First in the morning trade.
Okay. All right. So we'll watch out for Home First as well, Nimesh. Thanks for putting that on the radar. Let's quickly recap a list of stocks to watch. The ones that have positive news flow this morning are IOC, HPCL, BPCL, Lemon Tree Hotels and DOMS Industries. Those that have negative news flow would be Tata Motors, Siemens, Voltas, Manappuram Finance and Home First Finance. Okay, so that's a list of stocks. Let's also do a roundup of the commodity market action. We have Manisha joining in with the latest. Manisha, good morning and happy Monday. What's on the radar?
Well, it's going to be a very, very eventful and loaded week this one. So I'll start with the crude oil prices where we are trading at a 2-month lows right now. Prices did decline 4 to 5% in the previous week. All eyes on the U.S. and Russia presidents, which are meeting in Alaska on 15th of August. So while the U.S. is going to be pushing for a ceasefire, Russia is demanding territorial concessions. And then there is also a threat over secondary sanctions on Russia energy trade partners. So a lot in focus here. For the metal as a sector, well, we've seen more than, it's more like a consolidation at this point in time with markets awaiting further development. When it comes to data, you have plenty of that coming in this week as well. You have the U.S. inflation data and then the U.S. Fed Reserve Jackson Hole Symposium. That's between 21st to 23rd August. Much of the cues would come in from that. And then you also have the 12th August deadline for the U.S.-China tariff truce. So that is what really seems to be leading many of these metal markets. Gold prices have gone in for some profit taking, but the metals seem to be doing well. So silver gained 3% on the previous week. We've also seen some consolidation come back for copper. Aluminum gained up by 2% in the previous week as well. So metals seem to be doing quite well.
All right, Manisha, thank you very much for that. So that's commodities in focus and copper in play as well. We'll take a quick commercial break here. We're going to come back in just a bit from now. And we'll talk about individual stocks. We'll have Prakash Diwan help us do that. A lot more coming up here over the next 30 minutes or so.
Welcome back. Hope you're having a good morning. Well, let's welcome Prakash Diwan, market expert who joins us on the show. Hi, Prakash. Good morning. Good to see you win. Prakash, let's talk about Tata Motors. You know, the numbers were disappointing, but the stock has underperformed. Do you think if it opens up a little bit weak, it's actually providing an entry opportunity, or would you stay away?
Good morning, Nigel. So there's no doubt there is softness on the stock. You know, I think it's the first big casualty of the tariff impact, given the fact that US is a significant contributor to the JLR portfolio. But what's interesting is that the company is still kind of sounding confident of being able to maintain margins in a healthy band, which kind of justify the present price band that you've seen. It's already about 14-15% off since the start of the year, which means a lot of the other things have impacted the stock in terms of triggers. But more importantly than the numbers, I think it's what's going to weigh heavily is this acquisition from the Italian major that auto major that they spoke about. That's something which over the next 18 months is going to be critical for them to be able to juggle their balance sheet, to be able to grow in spite of all these weights that they carry. And one interesting thing that they mentioned about the CFO was that there's no shortage of, there's no impact on production because of the China rare earth metals kind of supply issues. So that's quite different than what we've been hearing otherwise, which means that they have bigger things to worry about, not so much on the supply side. It's more on the demand side, pricing side. So it's a little bit of a confused spot that the stock is in. I don't think buying it at this stage is going to be very rewarding unless there's some positive triggers that change the trajectory in a bit more decisive way. So I would give it some time, some sort of consolidation before things happen.
Okay, Tata Motors. So let's see how the market will react. Stocks anyway been down so much over the last 1 year. Now let's talk about ICICI Bank. So if you're a customer, then the minimum balance requirements, they've been boosted up across the board. And for urban and I think even semi-urban areas, the requirement is minimum balance of 50,000 rupees. Gaurav is here with more details. Gaurav, just run us through all the thresholds and any commentary around it, if at all.
Well, yes. For ICICI Bank customers now, this is actually, it could be taken in a negative way because, at least specifically for the new customers, because the minimum average monthly balance has been raised to around 50,000 rupees to metro and urban areas, which was earlier at 10,000 rupees. In semi-urban area, it has been increased to 25,000 versus what it was at 5,000. And for rural areas, this limit has been increased to 10,000 versus what it was at 5,000. Now, it clearly seems that ICICI is maybe moving to the customers who are well off and more elite. But at the same time, let's also not forget that this is only for the customers who are opening the account from 1st of August, and for existing account holders, it is not, the changes have not been made yet. Now, from what we can see is that from the regulatory point of view, let's understand how it is going to impact. RBI has not prescribed any kind of cap on the minimum balance for savings account, but at the same time, they also believe that the bank charges should be reasonable and commensurate for the cost of rendering the services. So definitely we'll watch out on how, if at all, a regulator is going to play any role in this kind of information and any kind of changes in the minimum account balance. At the same time, we will also be watching out on other banks. So when we look at some private sector banks like HDFC, IndusInd Bank, they are actually currently holding this minimum threshold of around 10,000 now, depending on the conditions. While PSUs, they do not have any kind of such conditions for the minimum accounts balance. So we will be watching out on private sector banks if they are going to follow the same trend. Secondly, when we look at ICICI Bank specifically, or in fact across the industry, we are seeing the CASA ratio is falling. In fact, for ICICI Bank, for first quarter, CASA ratio was at around 41.2% and the deposit growth was at around 12.8%. So it will be interesting to see how the CASA ratio is going to pan out and how the deposit growth is going to pan out specifically now that they have made some changes. But as of now, we can see some kind of sentimental negative impact on ICICI Bank today.
Just one thing, Gaurav, the salary accounts are exempt, right?
Yeah, as of now, there are no updates specifically on salary accounts, but these changes are specifically for the savings account as of now, as per what they have published in the...
No, so do we know if salary accounts are exempt or no? We don't know.
It is not,
not
yet
specified.
clear. Yeah.
Okay.
Yeah,
okay.
yeah.
Because I would have thought that if salary accounts are exempt, I mean, that's 75% of the, I think about 70-75% of the deposit base.
Yeah.
So then, I mean, the logic is that is anyway exempt. The rest is, people using all service, from a bank's perspective, using
Yeah.
all services, etc. of the bank.
Yeah.
I mean, using it to move money in, money out, etc. So it doesn't make that much of a, so you want to charge something. I'm assuming
Yeah.
that is the, but we'll have to clarify
you know,
this. That's
no,
a very important
in terms of the,
point.
I think the press release and the updates that came in over the weekend at least, I don't think there was a specific, call out or mention to...
I would imagine that
logically it should be, right?
It'll be exempt.
I mean,
because
logically you'll have newcomers who are joining at $20,000-30,000 and then it won't be possible. I have my first.
I mean, I read it for first time and I thought, well, I think I don't know why I thought, but I think it's just logical that it should be exempt. We'll clarify with the bank.
Yeah, absolutely.
And I'll just mention this, that my first job was, I had an ICICI bank account and it was exempt from for salary onwards 20 years ago. So.
Because if that is the case, then I don't think that is it is kind of well thought out.
In urban centres, especially 50,000 as the minimum account requirement or minimum balance requirement in urban areas, and that could come into conflict with entry-level salaries and those accounts that the bank has. We'll see how this plays out. But all things put together, we should pull up that last chart that Gaurav brought in, because that's what the sort of point of debate is going to be. That's deposit growth. Let's call out the CASA, which has been falling. Prakash, now come in on this. One way of looking at it is that you're getting rid of the smaller ticket size accounts and, the operational effort of, keeping them functional. You're going up the premium curve. But then CASA, we don't know the salary piece right now, but do you think that CASA could be under some pressure for ICICI Bank, and therefore will this be negative or positive because of maybe some margin improvement?
No, so I think the bank's doing the right thing in terms of moving up the premiumization chain. And remember, this is for incrementally new accounts opened. It's not for the existing accounts as yet. Most of the banks have done that. When Axis took over the Citibank portfolio, they continued with some relationship value on an aggregate basis of a minimum monthly balance of 10 lakhs, for Citi Gold customers. So, if you don't do that, you end up being in a situation where you can't pass on some of the services to clients. And it's a fee-based income that most of these banks would probably start relying on. It's an era where credit deposit ratios are not so favorable. You don't have credit growth as yet. So it's a good step. They'll of course, they have the flexibility and freedom to calibrate, recalibrate if required at some point in time. And just to add to that, salary accounts usually are out of the ambit of what these saving balances contain because they are special. But the moment you move out of a particular organization and the salary account converts into a regular saving account, then of course these norms would apply. So I think it's going to be good for the bank if you really ask me. It might seem like they're letting go of savings account deposits, but that's not so much the case. The reliance is more on fixed deposits, term deposits, and that would probably continue to offer them the time liability mismatches not being there. So all in all, I think it's going to be positive, not so negative. Even if the market reacts, it'll probably be a little bit of a sentiment reaction.
You took me back a long time, Prakash. I recall when I was employed and then, took a bit of a break, and then it was a struggle to maintain that EQB, average quarterly balance, which at that point of time was 10,000 rupees. Took me back a long time. Prakash, stay with us. For the time being, we slip into a short break. Prakash will be joined by our technical experts. Mitesh and Sudarshan are waiting by.
Welcome back. I think you got, 11 minutes to go for the pre-open session. The GIFT Nifty implied open is just about 5-6 odd point lower start. Sudarshan and Mitesh are with us with what they'd want you to do as far as trades are concerned. Gentlemen, good morning. Great to have both of you here. Mitesh, what's your sense? How's the structure looking? Friday, of course, the market sold off. Where are supports at and what are the trades to take?
Morning, Prashant. So the structure is definitely weak. The only, positive side is that with 6 weeks of continuous decline, we are slightly oversold. But on the upside, if the Nifty in the coming few days fails to capture 24,750, 800 decisively, then I think we'll head much lower. One, so that's the level to watch on the upside in case we get a rebound. And on the downside, while there are some supports over here, there's a gap around this 24,350, 200 level. But the weekly charts have started turning negative, which means that we could be looking at levels below 24,000, possibly to about 23,850 as well. So the way to approach the index is, if you get a bounce back, try and get into short side of the market around 24,700, 750 zones. Otherwise, if if you have been long, we'll clearly advise against trading much on the long side on the index. We have maintained, that trading the index with bear spreads could be a good idea, and I'll continue with that strategy. Just that you'll have to now shift at lower strikes.
Okay, all right. But Mitesh, structures punctured, yes, but you're not ruling out a near-term bounce?
Nigel, yes, because the idea is that will know in the live market, but with 6 weeks of fall on the hourly and the 2-hourly charts, the indicators are showing very, very extreme oversold readings. So a day or two of pullback can happen. The PCR also improved for a day in between, but I think still is close to the lower side of the range. So my idea is that yes, there can be a pullback because of the fact that 6 weeks of continuous decline means that there will be short covering at some level.
Got it.
And there is an event, right? There's an event as well, which I think on Friday, where we are shut. So will we see some of this covering in that sense? Before that, shots perhaps at the margin will be nervous. We'll see. Sudarshan, good morning. How are you thinking about markets from here?
Good morning. Well, it's a little depressing because 24,500 was a strong support. And I had explained once earlier that what happens if the support breaks? Then there's nothing to hold the market. Markets can stop anywhere. The support is only a number. But the next visible support comes much lower at 22,500. I don't even want to talk about it. But the point is that this market doesn't have any strong reason, technical reason to stop falling. It'll only be news. So in such an environment, I do not think we should go long. We should be looking at a small tepid rally towards 24,500, 24,550, whatever in that zone to build short positions again. It's news against us, seasonally weak months are ahead of us, and a market that is primarily a little overvalued. So this is a deadly cocktail. Look for lower levels.
Okay, all right. Let's get then to stock picks. Sudarshan, what's on your radar?
Well, the first is HDFC Bank. And HDFC Bank is likely to significantly outperform ICICI from now on. So I would suggest buying HDFC Bank with a wide stop at 1900. That's a positional trade, a swing trade. It's not intraday because intraday markets will do anything. Then I have Titan. Titan is a buy above 33.90 with a stop under 33.90. Dalmia Bharat is a buying opportunity with a stop under 2200. And the only intraday short, my last and fourth stock, is GMR Airports, where an intraday short can be considered with a stop above 91.
Okay, all right, got it. What about Mitesh? What is in your radar?
Nigel, I have more of sell calls, so I would want to, advocate a sell on DLF on a mild pullback, say around 750, 754 zones. That's a good range to take short positions. Keep a stop about 766.5 and look for a 725 kind of a target. A couple of stocks which I would want to short if the lower levels are taken out. So HDFC AMC is at support levels of 55.30, 25. So if it breaks that 55.20, 55.15, if it starts sitting there, take a short with a stop at 55.61. Look for a target of 54.40. Similarly, Indian Hotels, if it starts trading below 730, take a short with a tight stop at 741. Look for targets in the range of 710 to about 705. And one buy call, that's MFSL. Keep a stop below 1530. Look for targets in the range of 1600.
By the way, that large trade on Home First Finance, that's got taken out. It's happened in the block window itself. And if you look at the last 1 month chart of Home First Finance, the stock actually has underperformed. It's down close to around 13%. And with this large trade taking place in pre-open, in the block window, that means, some of the shorts will be in trouble today. So we'll have to see how the stock reacts. It's down 12.5%. There was that sniff that could be a potential large trade. And now that's out of the way. So we'll have to keep an eye out on that particular counter. This was a bit of an overhang. Well, we'll take a short break. Come back. We'll get you pre-open rates. We'll also get Rohan Madora of Equirus Securities who will be joining in. Stay with us.
Welcome back. 16 minutes to go before the day's action kicks off. And of course, just about a minute till we start getting some indication from the pre-open session. Let's ask Prakash what he would advise shareholders of PG Electroplast. Prakash, amongst all the other drama, this was the highlight. This became the headline by Friday afternoon, right? This big cut in the guidance and the way the stock collapsed 22%. Now, whatever is the management's explanation so far, and I think they did the investor call as well, about this just being a seasonality issue, too much inventory. Does it cut ice with you? And also tell us additionally if there's any other question you have, because we'll be speaking to them shortly, so we'll take up your question as well.
So this is a bit of a tricky one given the timing. A couple of things that the market probably is putting a bit of weightage into on the negative side is they raised money when they were kind of just about a while back when they were aware of what's happening, or this could have been anticipated, if not in its intensity, at least in terms of direction. And they of course have liquidated some holding, which a lot of promoters keep doing, of course, for other reasons. But where this takes the company going ahead from an organic business growth perspective, what's the application of all the funds raised? That's going to be a critical thing. End of the day, it becomes a capital allocation question, and if that is judicious enough, we know the business has been good. The management has delivered in the past. There's no doubt in terms of their ability to execute and all. But is the seasonality far deeper? The damage from the seasonality is far deeper than anticipated. How long does it? If it's a one-off and there's some assurance that you can kind of get when you speak to them, would mean that the stock does get some sort of a support. But the market always loves an excuse to book profits on some of these things which are valued richly and which haven't disappointed in the past. So anything that happens for the first time does get much more weightage, and that's what's happened. So I would believe it'll probably consolidate at lower levels, and then once the commentary starts turning favorable, things could be very different.
Okay, well, let's see if they can offer any further explanations that'll help assuage some of these concerns. Thanks for that, Prakash. You have a great day, and we'll connect again soon.
Thank you.
But for the timing, it's back to banking. SBI came out with a very steady set of numbers for the first quarter. Numbers were more or less in line with street estimates. Profits rose. Net interest income remained flat on a year-on-year basis. Our colleague Ritu Singh caught up with the SBI chairman, Mr. C.S. Sethi, to discuss the quarter gone by and, of course, the outlook ahead in a fast-changing rate environment as well. Listen in to that conversation.
We are still sticking to 12% credit growth.
So which is not much of an upside from 11.6%, the rate that we're seeing currently.
Yeah, but we want to be, a little more balanced in that. In fact, I did say last time that if things improve, we may even reach 13%.
Okay.
But if you see this 11.6% growth rate, what we achieved is better than what industry has done.
Of course, that's 9.5% kind of rates. On the deposit as well, your guidance was about 10%. Is that something you maintain?
Yes.
And you believe the deposit repricing is done, so therefore margins which have shrunk in the quarter, what sort of headroom do you see, for further improvement, especially if RBI, maybe brings down rates further sometime in the future?
So the margin improvement is coming mainly the repricing of fixed deposit, which is likely to happen. In our books, normally it takes about 8 to 12 months for the 80% of the fixed deposit to get repriced. So that advantage anyway will come in. Number two is that the margin improvement on account of CRR cut. We almost will have 52,000 crores CRR.
Starting September.
Starting September. That means, earlier also I mentioned that the NIM trajectory of U-shape will still we are holding on to it.
Yeah.
It's a combination of the cost of deposits coming down and the repricing of retail loans becoming stable. At least till December, we don't see any further rate cuts. Which means that the retail personal loans, retail home loans will remain at the rate what it is today.
But it's a U-shaped recovery. It's not a, it's
no, it will be a U-shaped because there's a lag in terms of deposit.
So you'll be able to get back to or defend rather 3%.
So our exit NIM probably would be above 3.
A quick word on the asset quality as well. So typically we understand the first quarter does see a spike, but it's a biggish jump for you, from 4,200 odd crores to almost now you have 7,900 crores. Briefly for our viewers, where did the stress come from? And other pockets of stress that lenders have been highlighting, whether that is MSME, MFI, is there something you'd like to point out as well?
No, first of all, I think the comparison should never be with Q4.
Yeah.
You should compare with the Q1 of the previous year.
Which is more or less flat. There's little bit of a spike.
200-300 crores and in a book of 42 lakh crores is not
It's
a matter
not
of
much,
concern. And also in the Q1 generally is the gross slippages. Right? As we go forward, it become net slippages.
Yeah.
For instance, from the 30th June till today, almost 14 to 1,500 crores have been pulled back.
Okay.
In the slippages. So there's no great concern in terms of the asset quality. We have not seen any of the segments doing, in our book at least, that any stress is.
Okay, so improving margins, no asset quality stress, biggest bank, really helping, I think, take away some of the concerns that we've seen in some segments, and actually in Tier 2 banking more than Tier 1. Let's discuss this and more with Rohan Mandora, banking analyst. Rohan, I definitely want to talk about SBI and the whole Q1 banking performance. But even before we get that, can we just address that very newsy development from ICICI Bank before we talk earnings, of them increasing this minimum, account balance threshold? Do you see this as a positive overall or a negative?
Yeah, hi, good morning. Thanks for having me on the show. With respect to this news, I think it's slightly negative from a medium to long-term perspective. Clearly, most banks have been focusing on a higher MAV customers as part of their strategy, but explicitly shunning the smaller MAV customers may not be a right thing to do. See, if you look at certain customer segments which are young in college, the first account that they open goes on to become a primary account over the next 5-10 years. And if you are missing out on those opportunities at this stage of time, it can have a medium-term implications on the CASA strategy of a bank. So that's where I think, from a focus perspective, this thing could still have been continued by tweaking the KRAs at a branch level, which most banks have been doing. And ICICI also had been following a strategy wherein whatever channel checks we did last year, we got to know that if a customer of say 10-20,000 average minimum balance was willing to exit the relationship, ICICI Bank was not making efforts to retain them. So if those things were happening even earlier, maybe specifically calling it out that we don't want to focus on a smaller segment customers and as a strategy don't want to onboard them may not be a right thing to do is what we believe.
With salary accounts not part of this, Rohan, you think, if they would have looked at the data, right, in terms of where they're making money, where they're actually, what is the unprofitable segment in that sense, and what you said, right, you start working, open an account, and then sort of that becomes a primary account. Those are salary accounts. What you're describing in that sense, right, Rohan?
Yes. So see, from salary mandates, the minimum balance remains at 0, but see, in India, there's a good number of self-employed people also who have a decent balances in their bank accounts. And that is a segment that does not get covered under the salary account relationships. So that way, I think there's a good opportunity. College students, when they open their first account, the balances would be low. But typically, when they join a workforce, if they are, say, having an HDFC or an IDFC first account, and if the employer gives them an option to continue with that, then they'll most likely continue with that account going ahead also. And earlier, it used to be a mandate that every time you change a job, you open a new account. But now, in the last few years, we have seen that when people are changing jobs, typically a large employer has relationship with more than one bank on the salary relationships. So those kind of accrual that happens, or the account opening that happens, even at salary opening level, that thing can change. So that's where I think from a medium to long-term perspective, it can have an implications. On an immediate basis, obviously, there will be no implications for ICICI Bank.
Yeah, absolutely. Actually, I completely take that point. And to second Nigel's point as well, I remember that, many of us, first account, ended up being with ICICI or any account. When you're young and you're opening an account with a bank, the tendency to close is not there unless you're being penalized at some point. Many times those relationships then go on to become, far more durable, bigger relationships as well with any bank. But yeah, let's say that's ICICI's approach to it. Okay, so medium term, slightly negative. Near term, not much of a reaction. Got that point, Rohan. Now let's come to earnings. Let's start with actually SBI itself. Numbers look really good. You just heard the commentary from Mr. Sethi. He's promising better margins by the end of the year. Unlike so many other lenders, so reassuring, right? No asset quality stress in SBI. What's your call on the stock? Or what's your general takeaway and your sense on larger banks, if not this stock per se?
So see, I think 1Q was a quarter wherein we have seen NIM compression. For 2Q, for most of the PSU banks, we would expect that NIM compression would be lower because the repo impact has been highest in 1Q for most PSU banks. For the private sector packs, we would see that second quarter will see a higher impact of repo transmission because most of them were either on a month-end, quarter-end, or a rolling 3-month basis kind of a transmission, unlike PSUs which are on T+1. So 2Q would be slightly more challenging on NIMs for private sector banks. And as MD Sir said, for SBI, second half would see improvement in NIMs. So that's how we would also expect that 2Q should be more, one would see more pressure on NIMs on the second quarter, and second half onwards the recovery would come in. The few softer aspects that came across in this results were clearly on the asset quality side, which largely were focused on the smaller ticket secure segment, also like CV as well as small ticket LAP. This becomes a monitorable. It would be good to understand incrementally from the management that is this an impact from the impact from, say, the MFIN 2.0 guidelines, wherein certain smaller ticket customers were not able to avail loans to be able to refinance their ongoing requirements. So that could be one implication that may be leading to this kind of thing. And plus, overall, the commentary is over-leveraging and overall economy remains weak. So some implications of that could also be there.
Okay, all right. Thanks very much, Rohan. Good conversation. Short one, but helpful and crisp. Thanks for joining in. Let's quickly look at the market and then get some final trading ideas before we move very, very quiet. 8 points. That's all the Nifty is giving you in the pre-open. The sensex is up 27 points and the mid-cap index is absolutely flat as well. So going back to our technical experts, Sudarshan, what's the 9-10 call?
That would be GMR Airport, intraday short in GMR Airport with a stop above 91.
Okay, got it. And Mitesh, what about you?
I will choose a sell on Indian Hotels if it breaks 730, take a stop at 741, look for a 710 to about 705 kind of a target range.
Okay. By the way, just want to point out, Mitesh, in case you have very quickly 30 seconds, levels on Voltas. Voltas could be starting substantially lower, 7-8% lower, and then we'll see if there are buyers that come in. But just levels to watch.
See, actually, last time the Voltas stock had gone into correction, we saw, 2 or 3 times it bottomed out around 1190, 1200 zone. So I think that's the first level to watch out for. In case we start breaking below that, then don't be surprised if we even head towards 1050.
Okay, all right. Talking about Voltas, let's hop across to Vinny. She's here to tell us about the stock that in pre-opens down more than 7%. Vinny?
Hi, so yes, we're expecting a red coming in for Voltas. So given that the weak set of numbers was reported by the company, a quick take on what the brokerages are saying. Jefferies, they're maintaining their buy target price of 1,670 rupees per share, but they're saying that obviously those weaker volumes is something that impacted the earnings. And they did highlight one point, that market share on a month-on-month basis in April, May and June, that had seen an increase on a month-on-month basis. Now, what Jefferies is expecting, that festive season, early festive season, plus possibility of a second summer in the month of September, October is what we're watching out for. And the new BEE ratings are something that could maybe lead to some bit of a recovery for the RAC segment. Though as of now, Voltas is trading, below its 5-year historical average. Nomura, maintaining a neutral rating, target price of 1,317 rupees per share. They're saying there is a risk to the margins is given that the rising competition is coming in. Demand recovery, they said, is already factored in for the stock as well. Now, they are lowering the FY26 RAC industry growth to just 5% from previously 10%. So that's a sharp decrease in the RAC segment overall. And they're maintaining their FY27 target at around 20% in terms of the tailwinds that could come in for the segment. For the UCP segment, the revenue growth they're expecting is at 6% from previous 13% is what they were expecting in FY26. Voltas on CLSA on Voltas also is maintaining the hold rating. They've cut the target price to 1,170 rupees per share, given that the weak set of numbers that came in from the company and higher inventories is still a concern that they're watching out for.
All right. Actually, Vinny, thanks very much for that. The management of PG Electroplast joins us at 9:30 this morning. And that's the first and exclusive interview to talk about the revised guidance and, of course, the trends in the AC industry. So that's Vikas Gupta, PG Electroplast. Stock was down 20% on Friday. We'll talk about another segment, right? OMCs, oil marketing companies, where that sort of one-off payment, which has been long awaited by the market, seems to be coming through. How's the market going to take it? Sonal is here with the news and the impact. Sonal, morning.
Good morning. Well, yes, it's after a long time that this positive news has come by for oil marketing companies. The street was waiting for this 30,000 crore rupees in terms of LPG under recovery compensation, which will be paid over tranches. Although, remember, 41,300 crore rupees has been the total under recovery so far for all the three oil marketing companies. It is unclear whether it's a one-time grant now or the government will go ahead and give them the rest that is pending as well. But nevertheless, it is a positive news. Jeffrey says that they estimate an upside of 29 to 42% on EBITDA for all the three companies and 38 to 70% in terms of profitability as well for FY26. Now, do remember, this is under the assumption that all of it is paid in FY26 itself. ICICI Securities says that LPG compensation is a material boost for these companies, takes away all the margin worries that these companies had for FY26. Morgan Stanley says they prefer HPCL and BPCL. Subsidy could boost FY25 earnings by 75%. It could delever their balance sheets by 12% and support a consistent 14 to 15% ROCE, that is a return on capital employed as well. There is limited downside risk if fuel prices are cut further by 1 to 2 rupees. UBS says that the payment currently is 74% of FY25 dues and 62% of the dues which are accumulated till now, that is 41,300 crore rupees. It is equivalent to the book value between 8 to 16% for all the three names, and the market capitalization for that, it is a percentage of around 6 to 9% for all the three companies in that order. So yes, a positive news that has come by, but again, it's not the full amount that they've received. It's 30,000 crore rupees this time.
All right, Sonal, thanks very much for that. I think we got a slightly positive start and slipped into the red. So nothing on the indices. 24,360 on the Nifty. The Nifty Bank is at about 54,950, absolutely flat here. The mid cap index is down about 0.25%, 150 points, and I think you've got the small cap index which will come up, which is also starting lower. That's about 40 points down, 0.25%, 17,385. But absolutely kind of sort of holding on to very, very flat levels as we begin this particular session. Almost evenly balanced, right in the middle. The number of stocks which are higher and lower on the Nifty. So you've got 25, right? I mean, ICICI on one end and Grasim on the other end. So let's get down to individual names, mid and small caps, etc. as well, because the index is not doing very much. It's kind of blinking red and green. Surabhi.
You know what? Before I talk about index stocks, Prashant, I want to pull up PG Electroplast once again. 22% on Friday, another 10% this morning. Let's pull up the stock. Okay, it opened up almost 9-10% down, now 6-7% lower. And I was just checking the shareholding pattern, how it stood after the promoter sold stake in May. So from a level of 49.4%, which is where they were at the end of the March quarter, June quarter shareholding, it's come down to 43.7%. The share sale happened in May at a time when the business was obviously going through difficulties. And I think it's more a question of just trust and credibility. And let's see, the management has been speaking on investor calls. We'll talk to them as well. And let's see what explanation they have. Business weakness is one thing, but disclosure obviously very, very important for the market. Anyway, coming back to the Nifty names now. On the Nifty, some green, Grasim, SBI itself, good commentary from SBI, 1% higher over there. There's some buying on Trent this morning. Adani Enterprises, NTPC. Some of the metals are doing pretty okay. Hindalco, Tata Steel, JSW Steel. Some hope building up, of course, around this US and China trade conversation that's going to happen today. Tata Motors is actually reacting positively. I mean, maybe you can argue a lot of the negative is in the price. Stock's been slammed over the last 1 year anyway. So is recovery in sight. Let's see, 1% higher on that note. On the flip side, ICICI Bank, the market is not too enthused. And I think the market probably is seeing merit in the argument that the analyst from Aquarius was just making, that in the near term, are you sort of, or in the medium term at least, are you going to be weakening your CASA franchise? That's the concern. 1% lower on ICICI Bank. Other weak names include Asian Paints, HUL, slight weakness there. Reliance is kind of dragging its feet, sluggish this morning. 0.5% cut. But net, it's even, Stephen, for the Nifty. Absolutely neutral, 9 points up.
The stock of the last 1 week has to be NSDL. It's 1,400 rupees now, 1,350 odd. I think let's pull up NSDL. That's the big mover from the listing price. It just moved one way. The float could be rather limited. Last few trading sessions, it's been moving very well. NSDL is listed on the BSE. That should come up for you on the screen. For those that got it in the IPO, well, they're very happy. And those that bought in the pre-IPO as well, now they would be breaking even. They'll be making some money because now the price is at around 1,400 rupees. So there'll be restrictions on selling these stocks because it'll be locked in. What else is doing well? Yatra, massive move out there. That stock is up close to 10%. So big up move is what we're seeing on Yatra. A couple of other good earnings reactions that we are seeing. It's actually up now 12%. Genus Bar, that stock is up close to 3%. Massive volumes is what we're seeing on that particular counter. And keep in mind the run rate that they're going at, they could probably, outbeat what they've set out for this year itself. So that's why the street likes it. Volumes high, up close to around 2%. HBL Engineering, that's the other stock that's up. Uniparts, that's another one that's coming on the list in terms of big gainers. And I think you have Jyoti Structures as well, that's up close to around 5%. These are all big volume movers in this morning's trading session. So we should get some of them up for you on the screen. On the flip side, PG Electroplast, now it's down close to 10%. Best Agro, got hit last week. It's got hit even more this week. That, in fact, is down close to around 6%, I think, the last time I checked. And Concord Biotech, that as well, is getting a drubbing this morning. That's down close to around 5% or thereabouts. So big movers from the broader market.
Absolutely. On the AC stocks, I just want to mention that Voltas also has had a complete washout quarter. Every number is a miss. So that stock anyway is down 6.5%. And this whole nervousness around the space has drawn down Blue Star. Blue Star numbers are already out. Everything's done, discussed. But again, just the sentiment negative is rubbing off on Blue Star as well, which is down about 2.5%. Prashant.
Absolutely. And, we got, 30 points higher on the Nifty now, 24,400 on the index at this stage. And I think you've got the Nifty Bank, which is also starting with about a 90-odd point higher start. That's about 0.17%. So this is a much better kind of sort of screen as compared to what the GIFT Nifty or the pre-open, etc., were indicating. Just a few other names here, right? I mean, of course, PG and Voltas. Amber is the other one, right? Amber is, again, big in ACs. 4% lower on Amber, so 7,045 on Amber. You've got Siemens, which is down 3%. Vamakshi was talking about this earlier. Sagility is another one, 3%. Numbers were very strong for Sagility for the quarter, but stock's been at that 45, 44 rupee levels for a while. It's not corrected, though, in this market fall. Biocon is down about 3%. Wockhardt is coming off with about a 2.5% knock this morning. Concord Bio is down 6%, 1,500 rupees on Concord Biotech. Havells, I think we mentioned Havells is down 2%. Again, that same sort of, AC story there playing out. Deepak Fertilizer is down 2%. And then I can go down the list, but volumes start to thin out very quickly at this stage. HBL, engine is the largest volume-led gainer coming through this morning. It's up 10% on the back of solid numbers. Look at that, 2.5 million shares. Number one across the board on the NSE with regards to volume and price action. Sarda Energy is up about 6% as well. Again, it's got, for this point in the day, it's got large volumes. So 567 on Sarda. I think Nigel already mentioned Yatra.
Yeah.
There is Afcons, which is up about 3%. Yatharth is up about 2.5%, 3% as well. So that's the sort of picture as things stand right now. 45 points on the Nifty, 24,400 is where we are at. Mihir Vora is now with us, Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Great to have you with us on the program. Thanks very much for your time. I just want to, I know you don't want to talk about individual names, and I won't ask you to comment, but I want to ask you sort of comment on you to comment on a situation. PG Electroplast, Shaw, and of course, I mean, consequently, I mean, the PG as a episode. What would you kind of sort of make as a veteran investor? How would you read it? There is the angle of the fundraise, and we, by the way, speaking with the management in about 10 minutes' time. So that one, and second, of course, implications for the AC space, Mayor, if you want to weigh in. Stocks are weaker.
Sure, Prashant. See, the point is that there have been indications of an overall urban consumption slowdown. And you on your channel also have been highlighting, the white goods space, especially AC, fridge, etc., have not been doing well. So there were lead indications that this space is not doing well, and obviously companies which cater to this segment would be impacted. We are also there are some reports of some issues about the Chinese stopping or at least delaying permissions for engineers to come in and set up the compressor units, etc. So overall, the news flow has not been that positive, and I don't think it's too much of a surprise that this segment and suppliers in this segment have shown signs of margin pressures and slowdown.
But on this issue, I mean, outside of the business point, Mihir, hi, morning, Surbhi here. My bigger question is, and I invite everybody to go and check out Hormoz's article on this on our website, CNBC-TV18.com. He's written how mutual funds, because obviously the business was so good, the commentary was good, how mutual funds and retail investors have loaded up on PG Electroplast in the last many quarters, at a time when the promoters have sold, and the promoters clearly haven't, disclosed this timely enough, perhaps, this whole business environment. So, Mihir, will this cast a shadow, or do you think the market will move on and PG will go back to its winning ways? Because it's good business, then running into slightly tough weather, versus the fact that perhaps there was not adequate and timely disclosure. Your thoughts on how the market perceives such events, not only in PG, but in general?
Yes. So overall, I think the manufacturing space, especially the durables and electronics manufacturing space, including mobile phones, etc., it is a sector which has high potential, high growth potential, but which also needs a lot of capital investment. So you have seen a lot of companies in this space come up with fundraisers because they have large plans. Some of them have plans in adjacencies. Some of them have actually gone into semiconductors and the PCB manufacturing space also. So this is a very exciting sector from the growth potential point of view, but it is a sector which requires capital. So, issuances and QIPs and capital raise is not a surprise, because when the going is good, when the markets are in a bullish phase, investors are looking at growth stories, and this space does offer long-term growth potential. So I'm not too surprised about the fundraise part. As far as disclosures, etc. are concerned, probably the timing can be better in some of these cases.
All right. Hi, Mihir. Good morning. Good to see you in. But how are you feeling about the markets on the whole, Mihir? This Trump tariff tantrum, that's something that's definitely weighing on sentiment. But I think the bigger cue is what's going on the domestic front. And the first quarter was actually very, very weak. If you look at power demand, if you look at, aviation, traffic over there, if you look at movement of steel and cement via rail as well. Now, all these indicators actually, at least in the last 7 to 10 days, they're showing some signs of life. If I look at the FASTag data, in value terms, the growth is good. There'll be an element of price increases. If I look at the power demand, that actually has perked up a little bit. Steel and cement, the movement via rail, that as well has done quite well. Are you seeing signs that things are going to be recovering? Because I'll tell you what, the next 45 days are going to be very, very crucial from a market perspective. We'll have pre-Diwali buying as well. Do you think you're seeing signs of a recovery domestically?
I think right now it's more of a hope case, in the sense that by default, we do consider this period as a slow period. So slowness in some of the segments that you mentioned is not a surprise in this particular time of the year. But always the hope is that once the monsoons are past us and the harvest comes through, domestic consumption and demand will come through. That's always the case that we work with. And given the fact that monsoons have been good, liquidity has been provided by the government and the RBI, there is a reason to believe that the natural cyclical recovery in consumption should happen in the busy season, in the festive season, so to say. So I don't think that's an irrational assumption to make. We are also going with that assumption. Having said that, the bigger elephant in the room is how the trade talks are going to pan out, because India is clearly at a disadvantage as far as the tariffs are concerned versus a lot of its potential labor-intensive manufacturing competitors like Vietnam, Cambodia, Thailand, and China, of course. So this 50% tariff is definitely not sustainable, and we hope that before the deadline of August is concerned, we should be able to come through some sort of an agreement, because clearly 50% is not tenable. It would destroy a lot of exports to the US. So, and that, of course, can lead to job losses, and that can impact consumption more than the cyclical recovery.
All right, Amir, thanks very much for that. Good getting those details from you. Really appreciate your time here on CNBC TV18. I think we can go across to the management of PG Electroplast now. The stock is down about 10% once again after falling over 20% on Friday. Shocking guidance cut coming in from the management. We have Vikas Gupta, Managing Director at PG Electroplast, who's with us. Vikas, good morning. Great to have you with us here on the program. Thank you for joining us. You've got, I'm sure, lots of questions around what has happened, what has transpired. Let's just start with what happened, Vikas, because the guidance cut from you came as a large shock to this market, as you can well imagine, because even at the end of the last quarter, not this quarter, the previous quarter, there was enough and plenty indication that the AC season is going to be weak. We heard it from OEMs that we speak with. We heard it from others as well, that generally things are looking a little weakish. The season is not going to be all that great. But we've heard it from you after the quarter has ended. So let's just start there. What happened?
So, good morning, Prashant. It's always a pleasure to be on your show. So basically, I'll try to first answer the question on the quarter one head on. That is a more important thing, that how it played out. So, everybody was expecting that the overall AC sales will rebound in months of June and July. In fact, we were operating at more than full capacity in months of April and May. And so it was looking very, very, very like the momentum was going in our favor. But actually, as the channel inventory built up, and there was no rebound in the sales for the air conditioners, the secondary sales of the air conditioners in the months of July and August, as we are seeing now. So we had to revise our guidance accordingly.
But Mr. Gupta, sir, if you allow me to ask you this, and you've been in the business for so long, right? And you'd know this, and I know it's more, you're in B2B sales, but in general, the peak months where the best offtake for ACs happens is actually much earlier. I mean, February, March, that's where people start buying to build up for the summer months. In fact, if anything, June and July usually, it's not the peak season, isn't that so? So how is it that you didn't see this building? Because from fan makers to cooler makers to AC makers, Blue Star, Crompton, everybody was telling us that it's a weak summer and expect a sluggish Q1. So how did you not see it?
So Surbi, let me clarify on that. If you look at the peak months for the production for a company like ours, start in fact in month of November, December. So we start ramping our productions in month of November, December, and the sales and the brands also start picking up the inventory from our factories. And the channel partners also start picking up the inventory, and that's the primary sales which start happening in months of January, February, March. So there is a lot of anticipation in the channel, in the industry, that the sales will be good. So that's why everybody built up the inventory for that. So as we progressed, in the month of May also, we were hoping that the market will improve, the demand will improve. We were having the order book, we were having the forecast from our brands, our customers, that was quite robust, and we were building on it. And we were believing that numbers, and we were going ahead with those production numbers. So it was only later in the month of June that we saw that the secondary sales are not picking up, and the channel inventory is becoming huge. And that's when the demand from the brands fell off the cliff for us. And we realized that we are sitting on a huge inventory for us.
Got it. So I'll tell you what, I think what has compounded the problem, I'm sure there was some, misreading of the situation. Very clearly that's happened. But what's compounded the problem from a stock market and your investor perspective is that all of this has happened when you as promoters have sold stake in the market. And that has a business hit is one thing, and business hits always happen. It's a cyclical business. So just explain this to us, and I'm repeating for the benefit of viewers. March 25, promoter shareholding 49.37% as on the Bombay Stock Exchange. End of June quarter, promoter shareholding 43.72%. So when people tie this together, they're saying, what is this? Why won't we give in an advance warning? So many companies do business updates. You could have given an advance early indication. Could you not have done that? Was that a miss?
So Surbi, like the optics and the timing looks like that, and it is unfortunate that it is looking like that. please understand, as I told you earlier, the May month also we were operating at more than our capacity. The sales were looking good. And, the block deal that the promoters have done does not change our outlook on the business. The long-term outlook on the business remains intact. And we have done the QIP also. We have raised 1,500 crores from the investors, from the marquee set of investors in December 2024. So we are already working on those capex guidelines that we have given earlier. We are building on our new product diversification. We are working the new launch of product platforms. We are building up new capacities. So the long-term story of the business remains intact. It cannot be impacted by the one single week summer.
All right. Hi, Mr. Gupta. Good morning. Thanks a lot for joining in. Mr. Gupta, you have created big wealth for investors over the last 5 years. The problem is what has just happened. So let's get a couple of those questions out of the way. You have guided for a net profit of around 310 crores for this fiscal. Is there a downside risk to that number?
So, Nigel, as of now, we do not see any downside risk to that number. So definitely the margins are getting impacted. We know that. But as of now, we do not see any downward risk to that.
Because even after this correction, you're still at 15,000 crores of market cap, which doesn't make the stock very cheap. So that's why investors will be fretting if in case that 310 crores of net profit guidance will be missed. You're saying no as of now, right?
So, Nigel, if you've seen the history of the company, we have been always trying to outperform the guidance.
Correct.
So we will try to do that.
The problem, sir, is you're best remembered for your last performance. And the last performance has been a little bit jittery. So hopefully you find your form yet again. So that question out of the way. Next, your promoter holding from around 65% because of dilution, the QIP, because of the block deal, it's come down to 43%. Now, I'll tell you what, analysts will say this and that, buy and sell side will say this and that, but the promoter is the best analyst on a stock. And if he's going to back up the stock, then it's going to be important. Since this sort of an untoward event has happened, would you consider coming in there, buying 1.5%, giving some confidence to the shareholders? Because currently, all those marquee names, they are fretting a little bit. They're saying Mr. Gupta was promising us big growth, and that's not really taken place. Would that be an option?
So, Nigel, as per the block deal, I think terms, we are not allowed to do any trade for a period of 6 months. So, given an opportunity, we will definitely like to participate in that.
Exactly. So that's my next point then. 6 months down the line from that May 26th, when you sold that block, will the promoter entity, try to come in there, increase their stake? Because as of now, there's no visibility. Q1 has been an absolute howler. You've gone ahead and cut your guidance. Next 2 months will be plagued by discounts and heavy inventory in the system. So probably, the intent could be post this cooling off period, Mr. Gupta and family could come in there and increase stake.
So, Nigel, we will definitely participate if the time and the rules permit. We will like to look at that opportunity also. But
where would you want your stake to be, sir? Sir, it's just a question of confidence. Like Nigel said, your stake has come down from the 60s to now 43, 44%. When this window whenever the window opens, where do you want your stake to be in your company? How much equity do you want to own, sir?
So, Surabhi, I don't feel that we are sitting at a small stake in the company as a promoter family. Sure, if you look at our peer group. So we are sitting very decently at the kind of stake that we have in our company. And as I told you, that we are fully committed to this business.
Right, Vikas, got that. So it's not, no, absolutely. It's the incremental change which was the promoters sold. That was the point. When you met investors in May for this for the promoter stake sale, you're saying there was no indication at all of the fact that this is, and all this happened in the month of June. That's what you're saying.
So I told you, Prashant, what happened. We were already running full steam in month of April and May and June as well.
Okay.
So we were hoping that the recovery of the demand will happen. It didn't happen that way.
Okay. Now, Vikas, how by this inventory that you're sitting in, by when will this return to normalized inventory?
So for us, the normalized level of inventory is almost a 1 month production. So we feel that by the month of October or November, we should be normalizing the inventory levels to a level of 1 month production. So we already have some kind of indication from the customers for the coming season. And we are working with them to see how to recover the situation.
October, November is when inventory gets back to the standard, normal 1 month sort of inventory, right? Inventory level. So 2 quarters, I mean, you've got to basically bear for 2 quarters in that sense. That's the way to look at it from here. Now, could you give us a sense of margins as well? 125 to 150 basis point cut in margin guidance. What levers do you have? Where do you see margins basically from here on? And what levers can you use to restore margins to F525 levels? Vikas.
So please understand, currently the margins have been impacted. There are broadly 3 factors that have impacted the margins. First is the finance cost. With the kind of inventory that was there in the system, the whole working capital was tied up, and that we had to use a lot of discounting and factoring to manage our cash flow. Secondly, please understand the AC season is a highly seasonal. The profitability is highly seasonal. We usually make our money in the peak months. Then we have to manage our fixed costs during the lean months. But in the current year, as the summer season shortened and the sales fell off, so the number of lean months have gone up. So we have to manage our cost on that, and that has an impact on the margins.
Sure.
So that is where the operating leverage actually turns against us in this case. So we are trying to see how to recover from that situation. Thirdly, the input costs have also gone up. The dollar exchange rate and the copper tubing, everything had an impact on the margins as well.
Sure. So I just want to go back to that point. I think that'll be very, very reassuring for your investors to know. You said that you're committed to the business. I ask that question again, sir. What is the level of equity shareholding that the promoter family wants to maintain, even when the regulatory window opens up again? You're right now at just under 44%.
So, Surbhi, if you look at when we did our QIP of 1,500 crores, our shareholding went below 50%. So in our case, in our family, there was a lot of discussion on that, whether we should lower our stake in the company below 50% or not. But we have to see what is the good for the company and how we can grow our company. Even if that required for us to dilute our stake below 50%, we went ahead and did that. And we felt that was a better thing to do for the company in the long run. So the equity holding of the promoters is, I think, 43% or 45% or 47% does not make any difference. It is that the commitment of the promoter family towards the business is more important.
No, absolutely, sir. I mean, your point is well taken. There are completely professional companies with very low promoter holding, and the IT sector is an example of that. But investors do take that as some indicator of what's coming. If the promoter is lowering the holding, who are the bigger institutional investors? Therefore, I ask that question. Will you maintain it at least 44%? Could it go down? Would you want to go up towards the 50 mark? What is the intent of the promoter family right now?
So, Surbhi, the intent of the promoter family is clearly to look at how to grow the business. We will be engaging with our long-term investors. We will be meeting them in coming days and try to reassure them how the business is going to play out in coming months and coming years. That is more important. 1 week summer cannot define the destiny of the company.
All right. Mr. Gupta, so growth is what you're focusing on. And since you told us, that we could look at some of the peer companies as well. Amber is one peer that has 40% of promoter holding. But the last quarter, their growth was phenomenal, in terms of year-on-year growth. But it appears the industry itself went through a bit of a weak phase. That said, what about the compressor? That facility is what we have been looking forward to. That deadline has got pushed actually numerous times. And we have chatted in better times as well on this channel itself. Tell us, what is the date? Which quarter onwards do you expect things to start moving ahead?
So, Nigel, for the compressor thing, we do acknowledge that it has been delayed, and it has been delayed quite a lot. But from our side, we have done our bit. We have constructed the building. We are ready with that. We have already evaluated all the RFQs for the equipment or the plant and machinery that we need to buy. We are just waiting for certain approvals. Our Chinese partner is waiting for certain approvals at their end. As soon as they come, we will be placing the orders for the equipment and everything. Definitely, the timelines have been pushed now again. So we are hoping to have certain kind of clarity from our partner in month of October.
Okay. So FY27 is the safer timeline, Vikas?
So FY27 definitely looks better.
Yeah, okay. For this compressor JV to kickstart in that sense. I just had two more questions. Are there, other AC-related stocks are also coming off sharply? I think you were mentioning that what you've seen in this summer in terms of AC sales is the worst since 2008, Vikas?
Yes, Prashant, yes.
Yeah, 2008 was the GFC. I mean, of course, there were other factors then at play as well. Has something really, is there any reason for demand to crater like this, as you see it?
So please understand, Prashant, like if you look at the last year, when the demand went through the roof, so nobody could anticipate that time also, like how the market is going to behave, how market actually behaved. And there was the talk in the market that there was a shortage of the inventory in the channel, and there was a lost opportunity of more than 1 million or 2 million ACs which could have been sold because of the shortage of the inventory. So it is very difficult to anticipate, but please understand, there is a lot of impulsive buying of air conditioners still in India. And as there is a longer dry spells, the people tend to go and buy ACs. That is something that needs to maybe change over a period of time. But if you look at the long-term story, I say again, the long-term story for this business looks very robust. We should not try to define this business on the basis of single summer. So we have to look at that way.
All right, Mr. Gupta, very quickly before we let you go, will you consider buyback? I'm not sure about the regulations, but you can't buy from the open market. Since the stock has crashed in this manner, you have lowered your capex as well. Is a buyback something that you all could think about?
So no, so we will be like the current capex is already going ahead. So there is not a scope of buyback that we are looking at. We are going ahead, building our capabilities. We are not stopping here.
Yes, got it, Mr. Gupta. We appreciate you joining in, fielding all those questions. As you're saying, the longer term, you'll have your focus on the industry is going through a bit of a weak phase, but you're coaxing your investors to keep the faith. We'll hold you to these numbers, and we look forward to chatting up with you, sir. But for the past quarter, it's been very, very disappointing for your investor community. And as we speak, the stock is down close to 15%.
Okay, so that is PG Electroplast. Market still has more questions. Let's see. The management has given lots of answers. We'll see how this plays out earlier. But from all the secondary market action, let's talk about the primary market because there's a new issue out there. Bluestone Jewelry's IPO is opening up. It's an issue which is a little over 1,500 crores, 1,541 crore rupee IPO to be precise. It opens out for subscriptions today. The price band has been set at 492 to 517 rupees per share. The company has raised just under 700 crore rupees from anchor investors. So let's talk about the business and the prospects with Gaurav Singh Kushwaha, Chairman and Managing Director, and CEO Rumit Dugar, Chief Financial Officer at Bluestone Jewelry and Lifestyle. Gentlemen, thank you so much for joining in, and good to have you with us. I can say, I've been a customer already. But so I have two straight questions. One on the losses, because while the company has been growing very, very well, you've exhibited 50% growth. It's, fashion jewelry, jewelry for the modern woman, etc. That's been the positioning. Losses have continued. That's one part. The other question that I had was actually on what happens to the IPO, because there's been some chatter and some conversation that apparently there is a case that's been filed in the Securities and Appellate Tribunal, making some allegations on disclosures, etc., things like that. Where does that stand? And could it impact the IPO? I don't know what's happening at SAT. So if you could just clarify.
Sure, let me take that. So on the SAT case, there was an appeal that was filed by one of the litigants. That appeal, there has been multiple hearings that have happened. The appeal has not even been admitted yet. And we've got all the requisite approvals. So absolutely there is no impact on the IPO.
And on the losses part?
Yeah, sure. So on the losses, look, I think the business has seen tremendous amount of growth. We've been investing quite aggressively in the business to build scale. As you can see, we have almost 275 stores. And we are at a point in time, if you look at our EBITDA margins are already close to 7%. And a lot of the capital investment has gone in the last 2 to 3 years. And thus, we are coming to a market at a time where a lot of the investments have gone. The growth is still very high.
and thus there is tremendous amount of operating leverage that is flowing in the business.
Morning, we're calling it KYC, Know Your Company. Surabhi knows the brand. For those who don't know the brand, Gaurav, if I can request you to just tell us a little bit about the business itself.
Sure. So we started as an online-only jewelry brand, and for 7 to 8 years, we were largely online only. I think at that time, we realized a very peculiar user behavior where people are finding it very comfortable being able to browse so many pieces of jewelry sitting at home. But I think given the nature of the category, given the price point, given gold, diamond, etc., there was a push from customers that, okay, we also want to see it in person, physically before completing the purchase. So while online was doing its job of pulling in people in droves, and see, online in a way is a much better, it's much better at letting people browse jewelry, because that is something you cannot do in offline stores. And so essentially that worked very, very well for us. And the ask from users was to allow them to also see it physically before they could buy it. So we started opening stores, and we are very young to it. So FY19 was when we opened our first store. We opened 5 stores in that year, then 11, and so on. So and we saw tremendous success, and that's why we started increasing the store presence exponentially. And that also links back to some of those questions about losses, because those early stores are extremely profitable. But what happens is, because it's only been 5 to 6 years since we started opening the stores, the ramp is like this. And most of the stores are sitting in a very, very young cohort. But they're all showing very strong SSSGs. So if you look at same-store sales growth at a blended level also, that's 30% plus, which is kind of unheard of.
How many stores do you have now?
275.
Across, in terms of...
Across 117 cities, across all geographies. In fact, another beautiful thing is in this category where most of the players are very zonal, very regional, we are among the two who are naturally national.
In terms of the split of products that you sell, how does that, gold and...
So almost 67% of our sale comes from studded jewelry, which is gold with diamond or gemstones, and 30 to 35% is from plain gold jewelry. And we also, as a consequence, we also have industry-leading margins. So our gross margins are to the tune of 37-38%, which are, again, so our growth and margins both are unheard of in the industry. And I think those losses are a result of some of the front-loading of investments that we've done.
All right. Hi, gentlemen. Good to have you all in the studio. Looking forward to interacting with you all, on a quarterly basis, at least with regard to your results. And maybe since Surabhi has given that push, visit one of your stores as well. That said, when do you all turn profitable?
So, that'll be a forward-looking statement, obviously. So we are constrained by that. But what we can tell you is the business momentum, as Gaurav mentioned, is pretty strong. We've grown at about 50% CAGR for the last 3 years.
Okay.
A lot of the capital employed in the business has gone in. If you look at some of our older cohorts, they generate about 24% store-level EBITDA, which is something that's part of the disclosures. And there is no reason for us to believe, given the kind of growth momentum we are seeing, that there should be any difference in the younger cohorts.
All right. So you'll have cut out the path towards profitability is what you're telling us. And once you're list, then I'll push you a little bit more on that point. Got that out of the way. But if you could help us out with, your margins as well. If I look at ad spends as a percentage of the sales mix, it's relatively higher in comparison to the industry peers as well. Where does this number settle at?
So, look, in terms of A&P leverage is pretty high, and it's a function of what is the size of the revenue base. So if you look at some of the larger brick and mortar peers, the revenue bases are much higher. Thus, as a percentage of A&P, it keeps coming down. So there is reasonable amount of operating leverage that is sitting on the corporate costs and A&P. We've seen those levels come down from about 12% 2 to 3 years ago to almost 9% last year. So we're seeing that continued trend of scale driving a lower A&P.
I just want to check on this number. A colleague was telling us that as of now, if we talk about total revenue, then online is giving you about 15% of your total revenue as of now. Would that be right?
No, so, okay, the way we see our business is we don't see online and offline channels separately. So all our journeys, all our users start their journey online. Some of them are comfortable placing the order online also. But for most of those people, they actually are more comfortable once they have shortlisted online to walk into a store and then convert. And just to put it in context, this is like pretty much buying a car. You can do all your research online while buying a car, but you won't click a buy now button.
No, absolutely. That's philosophically, how you've seen the business.
In terms of invoicing.
But I'll tell you, go on.
In terms of invoicing, that number is lower than 15%.
Yeah, it's about 6 to 7%.
6 to 7% is actual purchase happening only online without the store walking.
That is invoicing online.
Invoicing online.
What also happens, Surbhi, is that if, let's say, because we are an omni-channel player, if you place an order online and that product is sitting at a store which is 2 kilometers away, it'll get delivered from a store.
So the reason I'm
it'll
asking
reflect in store revenue.
The reason I'm asking you is very, very simple. If it was, if the bulk of it was happening purely online and there's no need for physical stores, obviously it's great for profitability and margins, right? That's not the case. I was a customer who came in who was walk-in customer, didn't even bother checking online. So as your store count keeps increasing, and you'll do a blend of mix and match of both styles, what's an aspirational, and I'm not even asking FY26 or 27, I know you can't talk about that, but give us a directional aspiration. Where should EBITDA margins settle at once stores have matured, once the model has matured, say 3 years down the line?
So I think the best way to kind of look at it is how my older cohorts are performing. My older cohorts, which are at a 10 crore revenue productivity at a store level, deliver a store level EBITDA margin of 24%.
Okay.
Right? So that, and that happens at a 10 crore productivity, right? So unlike big box, we don't need a 40, 50, 60 crore store productivity to deliver a 23, 24% store level EBITDA. We do it at a much, much lower revenue threshold. And the reason for that is our gross margins are close to 38%. So directionally, that's the performance.
20% plus could be an achievable target a couple of years down the line, not immediately. Okay. Can't say much.
I can't say much.
I just have to ask the lab-grown diamond question. Is there a threat? Because that's
we don't see that playing out in the smaller diamond categories where we are our majority plays. So essentially, diamond category also there are two type of customers. One is solitaire customer. Other is people who buy designs that also happen to have diamonds, and those diamonds are very, very small diamonds. So typically, what's happening is the lab-grown impact is being seen in the solitaire space, be it US, be it India, and so on. And I think Titan also in their multiple commentaries has revealed almost the same thing. In case of smaller diamonds, there's hardly any cost advantage of lab-grown, and hence there's hardly any momentum in that particular space.
So you're not looking to go big on
And solitaire is only 2 to 3% of Indian market, right? India is not a solitaire heavy market like many of the Western societies. India is more like design market. We have jhumkis, chandbalis, plenty and plenty more of.
So you're not looking to really push on the lab.
We are not.
All right, gentlemen, we'll leave it there for now. Thank you very much, and hope to speak with you on the day of listing. And of course, we'll have many more conversations after that. Good luck.
Thanks, Prashant.
Thank you. Thanks.
Okay, I think we've got the market, which is, actually it's not moved, right? It's right there, 30 points, 35 points in the Nifty, 24,400. And although the overall market breadth with about 45 minutes of trade behind it is a little negative, 1,500 stocks are lower, and you've got about 1,050 stocks which are higher. We'll take a break, more coming up on the other side.
Welcome back. Let's keep it with the corporate conversations then. Cummins India reported a good set of numbers for the first quarter. There was a beat across the board, and the stock was, of course, surging higher in Friday's trading action. Revenue growth was driven by healthy domestic and export sales. Our colleague Vamakshi caught up with the company's MD, Shweta Arya, to discuss the quarter gone by and the prospects for growth going ahead. Take a look.
The growth is very broad-based across different segments in the domestic market, across different markets from an export perspective. So very broad-based. So likely going forward, we should see this kind of demand coming in and our ability to execute better on that demand.
Just wanted to check in on your exports then. You mentioned they have not been, you've been cautiously optimistic on them as you've been highlighting. This time around, the exports were up almost 34%. So did you see any sort of pre-buying maybe that probably came in from the parent before, the tariffs came into force? Was that, number one, the reason behind the exports going up? And number two is, on one side, we do have some positives like the FTA with UK. On the other hand, we have 50% tariffs from the US. So how are you assessing the global situation right now? And, how are you navigating these sort of challenges?
It is definitely challenging times for us as is for everyone else who has exports around the world. The good thing is that our exports are diversified to different countries. So as you rightly said, on one hand, there is tariffs from the US. On the other hand, there is FTA as well coming in. So our teams are evaluating how best to position ourselves. But the diversification of our market does give us a natural balancing factor. We are trying to see how best we can take advantage of the places which are in our favor to increase our presence in at least those markets and balance our exports thereby.
All right. Let's also discuss how the pricing environment has been for you, right? So versus where you were in probably, the beginning of the energy transition norms to now, have you largely been able to hold on to the pricing? Is that correct?
We have been largely able to hold on. In different segments and different nodes, there have been movements in the whole year. Broadly, we have been able to hold on to pricing, although I will say that there are huge competitive pressures in the market. So we keep monitoring that situation. At the end of the day, we want to be very competitive in the market and provide the right value to our customer base.
Sure. So given the kind of competition that is now creeping in, across the nodes, would you perhaps look at revising your pricing in order to maintain your market share? Is that something that you might consider in case, the competition does go ahead and offers more competitively priced products, given that India, is a very price-sensitive market?
What we try to do is, one, we continuously try to optimize our own cost base so that we get that leverage if we have to change our pricing in the market. And we also monitor the market to be competitive, as well as we work with our customers to help them understand what value we bring to the table when we sell the products to them. So it's a mix of all those three. It's not always that you have to only react to pricing. We have all these levers with us which we can work with. And the product has been very well accepted by the customers in the market.
All right. And, let's also talk about your margins, because at 21.45%, they're the highest we've seen since Q4 of FY24. So if you can just help us understand what is driving this improvement, and, can you help us understand if you would be able to sustain at these margin levels, and are there any other levers that could perhaps play out that could probably push them even higher from here?
So from a margin perspective, if we look at this quarter, there's always a product mix that plays in different quarters. In this particular quarter, there is favorable product mix that has played out. And also because we had the volumes in this quarter, so there's some leverage benefit on our costs that we got. Going forward, if the volumes increase or stay closer to where we are, then we continue to get the leverage benefit. The levers in our hand are internal cost optimization, which across the board, we work on that, direct material cost or our own other expenses. We work on those. Those are the levers. And for sure, catering to the demand in the market and executing as well as we can so that we get that volume benefit and the leverage that we have been enjoying in this last quarter.
Sure. And, you've mentioned about volume. So I believe last time around you had said that, volumes would probably cross the CBCP2, products in the next 1 or 2 quarters. So has that happened right now?
The volumes are actually back to the pre-CPCB4 Plus era at this point in time. They haven't crossed. They are the market volumes. The market volumes are back to pre-CPCB4 Plus numbers now.
And for you, is it better?
It's a different kind of a mix now, because there are different segments which are at play now versus the earlier time. So it won't be right to compare just the volumes of now versus pre-CPCB4 Plus.
All right. And, you've also opened up a new opportunity for you with the BESS. So if you can just help us, quantify what is the kind of total addressable market cap that you're looking at over here, because I'm sure you must have thought about the opportunity and thereby launched this product. And other than that, what could its contribution be to your overall revenue pie, not in the short term, but at least in the longer, the medium or the long term perhaps?
So we have launched the battery energy storage system, considering where the market could move. And also, it is in line with our Destination Zero strategy, where we want to contribute towards products which can bring us towards utilizing different kinds of energy sources better. So this product is in line with that strategy. We are right now working with customers in India to see how they accept this product. There is a lot of value that we can provide to our customers. Largely, our customer base in the power generation segment would like to diversify the energy sources that they use. And battery energy storage system is that possibility that we can provide them. So from that perspective, we have launched the product. Yet to be seen what kind of market can we garner through this product launch.
So you're still assessing how customers are reacting to your products. But I mean, if you can just give us a ballpark of the kind of investments that you could perhaps make in this particular segment.
So as of now, we have launched a range of battery energy storage systems across kilowatt hours. We will see how the product gets accepted in the market and then decide how do we want to invest in terms of promoting this product more. So for the time being, we are testing the market with the product and seeing the acceptance.
How would this product fit in with your overall blended margin? So therefore, would it be better than the margins that generally, I'm not asking about your company specific margins, but in general, when it comes to the margins for BESS, are they better as compared to the power gen?
I would say that the power gen margins would be better because this is a new product. These are experimental days. And in the initial period of time when we seed these units, we will not, either the industry or us, the margin profile will not be same as power gen. Power gen would be higher.
All right. Well, that's the management of Cummins in conversation with my colleague, Vamakshi. Mitesh is with us with what he'd want you to do. We got a bit of a lift today to 24,400 plus. Mitesh, welcome back again. What would you do?
Yeah. We got a bounce back. The opening was slightly subdued and then we got a mild bounce back, I think, aided by the bank nifty, and that's where the action is. Indian Bank is something which I would recommend on the buying side. It's breaking out of a supply pivot of around 655, 657. So keep a stop below that. 654 is what I recommend. Look for a target of around 690 on the upside. I think SBI is leading the chart, but Indian Bank is the one which is outperforming. And the other stock is Muthoot, which I would turn slightly negative upon. So sell the stop at about 2,605. Look for targets of around 2,500.
Okay. All right. So individual trades there. Mitesh, thanks very much for that. We'll take a break. Manisha on the other side, commodities in focus.
Welcome back. Equity markets are having a quiet morning. Let's find out what's the latest in the world of commodities. We have Manisha with us in the studios now. Manisha, what's captivating your imagination this Monday?
Well, the energy markets really, because that is where we've seen a lot of movement come in the previous week with a very, sharp decline that we've seen across energy board, whether it has been crude prices, natural gas, heating oil, almost everything. So for the crude oil prices, we've seen 5% of a decline in the previous week, and we've opened Asia 0.5% on a weaker note. That tells you that you're trading at a 2-month lows for the WTI and the Brent prices also. All eyes on the US and Russia presidents meeting in Alaska on 15th of August. As of now, the US is pushing for a ceasefire. It has been doing that for some time. While on the other side, Russia is demanding territorial concessions. Russia has been hit with 18 packages of sanctions from European Union and various sanctions from other countries, including US as well. So that's exactly what they're asking for. Well, at this point in time, there also is threat about secondary sanctions on buyers on crude oil. For example, India, China and Turkey. That is the reason these countries and most of the global markets really will be watching out for this event and the statements coming in from there as well. There also are concerns that the US tariff could slow down crude oil demand going forward. That seems to be weighing onto the markets as well. OPEC and Plus, while they have continued to increase production and until the month of September, but the latest numbers show that the OPEC and allies are pumping less than the newly increased output. On paper, it's 2.5 million barrels per day. But when you look at the last couple of months, the kind of increase that they should be doing is not happening. That perhaps could be supportive for the prices. The markets also have seen some support in sense of the China crude oil stocks. For the second quarter, we've seen 82 million barrels of an increase therein. So China clearly seems to be collecting inventory there. And then the Europe oil stocks are down 9% of the 5-year average. You also are looking at US stocks down 5-year of the average as per the seasonal markets there. So these are a couple of factors that actually could be giving some support to the markets. But at this point in time, as I said, all eyes on geopolitics and tariffs, and some easing of stress could be coming in from that. I also want to take you through on what natural gas prices seem to be doing. A big move coming in here. We've seen nearly 5% of a decline previous week. It's trading 3% down in the Asian markets right now. The production growth is much higher at around 6 billion cubic feet per day, while the demand growth at 3.3. The street also is looking at the kind of inventories that European markets are holding, and that is weighing on. Bank of America, interestingly, has cut natural gas price expectation to below $3 per MMBTU for the fourth quarter as well. And the last plate should show you on what we've done in sense of prices for crude and natural gas as well. So in the last month, we've seen crude decline by 5%, but natural gas was down 15%. And in this year until now, we are negative in the double digit for both of these commodities. But this is going to be a very interesting week. You have so much events, so much data, and so much statements anticipated as well. To begin with, you have the US inflation numbers coming in, CPI and PPI, both of these in this week. Second, 12th August is deadline for US and China tariff truce. Whether we get an extension on that is something that the street will watch out for. And then US and Russia presidents meeting in Alaska on 15th of August is going to be a very important event. And moving forward, it is going to be about the US Fed Reserve Jackson Hole Symposium. That's from 21st to 23 August. A lot of statements anticipated out of this as well. So promises to be a very interesting week ahead.
Okay, and if there is a peace deal on Friday, I think oil prices fall a little bit if it happens. Manisha, thank you very much for that. It's a special segment, Indianomics. Lata in conversation on the impact of the key Supreme Court decision on the power sector with former power secretaries Alok Kumar, Pradeep Kumar Pujari and Nikhil Nagani of Bernstein also weighing in as far as individual companies and stocks go. Coming up in just a bit.